future, it'd be very competitive, sort of a break-even type thing. That doesn't mean that'll happen, but that's what the market's bidding if you look at the price of futures price of ethanol and other things. You add on up domestically, and we get to domestic use here. It's almost it's just about 800 million bushels higher than a year ago. So even though we have a record production, because of about the same number, we have way more than record supply. We had strong domestic use. And then we'll look at exports here a little bit, because that's the other big use. First we'll do it by looking at corn production to some degree. As you see, we had really a record corn production last year. We're having as much worldwide this year, except that's mostly on account of the U.S. The rest of the world is down, not quite as much as the U.S. is up, but quite a bit. Argentina, now this is, of course, in the southern hemisphere, so this crop isn't in yet, but they are getting pretty good moisture, so at this point it looks pretty good, and given El Nino that's coming through, it has a higher chance of helping them. In the U.S. it may help or hurt a little bit. Brazil's expected to have about the same size of crop. Mexico's down a little bit. Canada, European. This was a surprise as we get down here. This is the first time China, first of all, this was a record of records for China. This was a good crop up until about 3 years ago, even though it's significantly 10 million metric tons below. But that's the first absolute, they had gone up every single year for 5 years. This is the first year in the last 5 or 6 years that they had a decrease at all. And as you see, it's a pretty substantial one. So the rest of the world down a little bit. Sometimes I put coarse grain up here. Coarse grain percentage-wise in the world followed about the same pattern as corn. So by telling the corn story this year, you're also pretty much telling the coarse grain story throughout the world. And that doesn't always happen. If we look at exports to date, this is the one that was updated. This is not this morning's, which I had the impression of. Current marketing year, we're about the same as last year. And we look at exports just a little bit here. We're expecting to have considerably more. So those export to date numbers aren't real healthy. However, on the other hand, it was just a month ago or two, this number was even below a year ago number, so we're making some progress. And if we look at the export sales numbers, otherwise that's the previous slide, plus forward priced corn into the world. Up here, as you see, we're starting to make that substantial gain. You have to be a little careful. A lot of times the things you read, they'll say, I need so much a week in order to make the forecast. DTN last year made that claim that it wasn't going to make it all the way up until the year was over. What awful lot of analysts forget for some reason is there's about 100 million bushels in that export number that is donated and doesn't go into these numbers until the USDA puts them in. So last year we're actually exactly on track as we went through the years. This one there still needs to be some catching up. I'm not completely confident by any means we will make the USDA number, but as you see, the rest of the world is the one that was short. We're the ones with the extra corn. Although corn usage is struggling as we somewhat as we go through the year, and we actually lower total use a little bit. As you see, exports has not been a growth market. This is this year's projected exports. We'll get to this. This is my projected exports as we go through. But you see, you go all the way back, it's not been very much of a growth market. And it's only been this year, the last few years at all, that have gotten this line sloping up. But this year we're doing a little bit better than trend, as you see, or we expect to. Now you add all those things up, and you have, golly, something's wrong with that chart. Where's my ending stocks on the next page? Anyway, total use. What What that number says is that 17, you all can read it right here, 1.7, and it's of 13.5% of use. Ending stocks to use numbers, the corn price you see are up. We've looked at that a little bit before. Hopefully when I do the next year's, I grabbed the whole thing, I'm not sure what happened. Corn prices versus ending stocks is there's an inverse relationship. Generally as ending stocks go up, but even more important, ending stocks to use. And then the old famous diagram, we don't know what it means, but it looks like that these years of real low ones, we've really come back into a pattern like this. It still doesn't work, and it gives us a piece information, but as I spent a lot of time looking at last year, and I'm going to spend less time talking about it this year, corn and oil were not related until about the fall of 2006. They're very correlated up in that time. This is oil over here. When oil prices were real low, they weren't correlated as much. The best guess I have there is that mandates, if you watch the ethanol and gasoline markets, when oil was real low, gasoline market went below ethanol, even though ethanol is only 70% of the energy value. That's due to mandates. We had to use so much of it. As gasoline prices go up, then we start following gasoline, oil. I happen to use oil here. You could use gasoline as well. If we look at a weekly one, we see how much closer it does it. This is when oil prices were so low, and yet ethanol prices stayed higher. Otherwise, gasoline prices were lower and ethanol prices were higher than gasoline. That's that same period here. But as oil gets back into this arena here, it starts following it pretty closely. So what I found out since last year is, yes, oil and gasoline still drives the corn market as long as it's over about $60. If it's under that, then the mandates and other corn and supply and demand things follow it, have a bigger say in what it is. If we look at corn futures, which are obviously way too high, even though they've been down 3 times in a row. Are they back up now? Okay, I didn't do that. I was sorry I lost control today. My point in looking at this is the market, and this has been going on for a long time, the market been paying us about 5 cents a month to store corn. And it's been that way since this fall. If you had on-farm storage, the market told you to store it. If you have it in on-farm storage right now and it's suitable to store and all that kind of stuff, the market's still saying it probably will pay you to store. If it's stored at a commercial elevator, it's telling you shouldn't be doing that. Now notice I didn't say anything about prices going up or down. I'm purely talking about the spreads and the basis. And there also, I think, is a little bit more room for the basis to strengthen as well as these spreads telling us that it'll pay. Because at today's interest rates, it's only costing us about 2 cents a month to